Hello, everyone. I'm Brian Tierney with Lightspeed, and I'd like to welcome you to our webinar today, 2024 Year-End Best Practices and How to Prepare for 2025. We're excited to have you with us as we dive into essential strategies to wrap up the year-end smoothly and set your business up for success in the new year. Lightspeed offers a variety of free webinars each month, so be sure to check our webinar page on the website for a full list of upcoming sessions. A quick reminder, at any time during the webinar, feel free to type your questions into the Q&A feature at the bottom of the screen. We'll address as many questions as possible during the session, and if we don't get to the answer of your question today, we will proactively follow up with you following the meeting. The recording of this webinar will be made available to you 48 hours from now following the presentation. And now, without further ado, let me introduce you to our incredible experts from our partners at the Accounting Guys, Brian Lucas, Sarah Ale, Brett Smith, and Mark Weaver. Let's get started.
All right, thanks, guys. Thank you, Brian, for that introduction, and very appreciative of the opportunity to be able to present in front of a lot of you here, and hopefully some of you will be watching later as well. And got quite a big agenda to cover today, so going to kind of dive right in. And just as you're looking over this agenda, I'm not going to read through every one of these points here, but in general, when you're preparing for year end, it shouldn't be too much different than what your month-end best practices are. You just might have a few things that you do in addition to it, preparing for the future year, the year to come, where a lot of people, when we're talking about year end or when we're working with new dealers, they might be 5, 6, 8 months behind in accounting. And so they never really get that opportunity to really strategize and plan for the future. And so from our perspective, we should be looking to get a good month end close, 10th, 15th of the month, maybe even the 5th, where your data is reliable and consistent. And when you get to your year end, there might just be a few things that you do as far as finalizing the data from the past, but it's more about looking forward and analyzing what happened in the year and what do we want to do different. So we're going to dive into some of these next topics here. And the first thing that we're going to talk about is tax changes in 2025 and what we're expecting. And just from a general sense, from a tax perspective, in a year where there's a change in government, election year with the president, there's not a lot of things that typically happen that year because it's waiting on the next presidency coming in. But we do want to keep our eyes out for things that change because it is common that they will try to make significant changes immediately. And so just from that side of things, there's not a whole lot of things that are changing per se, or that were listed to change. But you might want to pay attention to our blog or to our LinkedIn posts as we learn of the things that are changing and coming forward for the year. A couple things that we do have, the IRS will change limitations or different provisions for inflation, how much you can put into your 401k or and different things as far as little limits there. But one thing that you may not know of is not only can a 401k plan have an employee contribute to a Roth 401k, but the employer match can as well. And if you have questions on that, there's definitely a lot more material behind that, but that's something that you might not be aware of. One thing that we're definitely interested in looking at this year is seeing how the pass-through entity tax will be treated for different types of businesses, as there's expected to be changes there, but we don't have anything solidified yet in order to share with you. Another topic that I wanted to discuss is when you're looking at year end, a lot of dealers will focus on, I'm going to go buy another truck or some type of a vehicle or piece of equipment because I know I can get a write-off for that. And that's usually the first thing that they'll remember, and they might even do it at Christmas or right at the end of the year. The next thing that dealers will typically look at is, I've got my building and there's something called a cost segregation that you can kind of itemize out the building and get some advantages with depreciation there and take things faster than you would in your typical depreciation method. But what I wanted to just mention is there are other items that you might not be aware of that you can accelerate depreciation on, for example, software or hardware. And so depending on what the invoice in the contract looks like, make sure that you're talking with your tax advisor, because something, for example, like Lightspeed, if for any of you who are considering that and wondering, any other benefits that come along with it, there could be definitely a tax benefit there where you can depreciate that in year one instead of over multiple years. So make sure that you consult with your tax advisor on that. Um, just something that you'll hear tax accountants say often, or maybe even attorneys or lawyers. Just there's three people you don't talk to enough and ask questions to early enough when making changes. It's one is your lawyer, one's your tax accountant, the other's your spouse, right? So make sure that you, if you're considering a significant change in your business or a different strategy, you might want to get your tax accountant or your advisors involved in that conversation, because you could be missing out on some vital advice or input that can help you with strategizing that. As far as monthly expenses go with software, just wanted to make sure I make a note there. They are expensed as a typical monthly period cost, but if you have some startup costs or some other larger fees at the beginning, those things can be accelerated there. So moving on to the next piece. So this is our balance sheet cheat sheet. Try to say that 4 times fast without messing up right now, but it's super super fun here. What we tried to do is kind of zoom out of the balance sheet and just talk about what it is and what are the typical changes within it and how you can utilize it to run the business and drive success through your business. And so just going across the top here, we have the main area of the balance sheet, and then we have a little bit more detail as far as into those buckets. This scheduled column is something specific to Lightspeed. Other DMS or QuickBooks systems, they might call it something different, but a scheduled account basically means that there's other reports that are behind that account that are linked to specific records, and you're able to get just a lot more reporting out of it, and it's easier to manage because you have scheduled accounts. And so if it's a non-scheduled account, those are areas that we typically see that there's more mistakes, maybe, or maybe areas where accounting isn't completed because you just don't know, you have to go look for it. With the schedules, there's other areas inside of the system, like your accounts receivable aging reports or your pay invoices screen or your unit screen, where you're seeing things, and if something is getting old or something is wrong, you have more eyes on it. Those non-scheduled accounts are typically where you don't have as many pairs of eyes on it, and you could see some issues there. And then what we mentioned here as far as increasing in activities, these are the general things in Lightspeed specific to the terminology of Lightspeed for what typically makes those account balances go up. Then we have the terminology for what typically brings them down, or what decreases or closes out that transaction. Something that we want to talk about a little bit here in this next column for department. A lot of dealers are used to hearing when they're looking at going to a 20 group or looking to, what's the next step for my business? You usually start with your business as a whole, and then they say, well, let's look at your income statement and see, are you making money? Are you losing money? And then they'll peel the layer back once on that onion and say, well, let's look at each department, accounting, sales, or sorry, parts, service, sales, and rental, and which of your departments is contributing to that number and which one is maybe hurting it, and is that on purpose or not, and looking at that. And we don't talk about the balance sheet itself. And on the balance sheet, those also, we don't departmentalize it in Lightspeed as far as it being assigned to a specific department. However, some of those departments play a key role in managing that account on the balance sheet. And just to kind of talk about that for 2 more seconds on the balance sheet is a living and breathing document. Every account that's there typically has a life cycle, and it might be that every 7 days it resets, every 15, every 30, every quarter, every year, and some of them will be open for the life of the business. But what it provides is lists that each different areas of your business should be working on and cleaning up, and it really is the meat, I would say, of the business. Is all driven through the balance sheet. A lot of times we focus on the income statement. That tells us the performance for what's happened in the past, but we can only trust it if the balance sheet is right. If the balance sheet is wrong, it is impossible to have an accurate income statement. They go hand in hand together. And so if there's anything that you see when running your balance sheet in Lightspeed, for example, you have contracts in transit. Let's say you've got $200,000 sitting in that account, but you've already received it, and you've already done your bank reconciliation. There's probably an issue. there might be another offset somewhere else, but in general, some of those errors that sit there over time, they end up having to go to the P&L, and there's an effect on your income. So it's important to make sure that each month you're reviewing your balance sheet, and then you might have a couple items at year end that you've been trying to research, trying to figure out, wanting to work through, but you might make the call of it's time to write it off, or it's time to adjust it out. And so this area here is an example of how we have viewed the balance sheet on the asset side, as far as what department should be contributing to this process and in the company review in month end. And one thing to note here is dealers that close their books together stay together, right? So this should be a process, not just from the accountant, but it should be each department head, right? Sales, parts, service, and rental, and the accountant all have a piece of it. And so keep that in mind as you're going through. And then the last three columns here, we have the reports in Lightspeed. The numbers that are represented here are the reports that you can run as a custom report and have it in Excel. The names of the reports are more the modules inside of the system that you can go to see more information about it. And so that's what that column is. Then we have another version of internal reports. So Empower Reports is an application that we have built for our clients to use that pulls all these reports and all the data out of Lightspeed, some of it using the API feeds and some using custom reports, but it'll pull the data out of the system and just display it a little differently. And so that is also listed there for where to find these reports. And you'll notice we have quite a few sections where we've consolidated them down to one simple report. And then one other thing that you do as far as an kind of audit or reviewing the accounts, if you run your internal reports and they just don't look right at all, there are some external factors from an accounting perspective that you could do to go through and correct those balances. There's a lot more than that what's listed here, but these are the typical things that you'd want to do first and look at as far as correcting things. The next slide here, this is just on the liabilities and equity side. So the same thing, we just broke that into two different sheets for you. All right, so one of my favorite activities to do each year end, or potentially even twice a year, but at least once a year, is doing an accounts payable vendor analysis. And so with this, and we'll be providing this documentation, but the report names that you see here, you'll notice there's tag at the end of the name. That's because we've created a couple of custom reports here, and we've added on to that existing stock report from Lightspeed. But you'll be able to import that into your Lightspeed, and then you could run that same file and do the same analysis. And there's a few explanations of some Excel formulas that I'm going to use, and just a few tricks, but I'm going to show you what we do in Excel. So let me pull that over really quick. All right, so I have a few sheets here where I've got the GL history, and then this is, if you run that GL history page, this is the information you're going to get: the code, the department, which in most cases it's the same, description, date, document, debit, credit, balance. And this is for every GL account in your system. And you define what date range you want. A couple of the fields that I've added is what user made the adjustment. This backend store user is more front-end systems, but accounts receivable or accounts payable entries, those will display the actual username. Added the department name, customer, and vendor information. So these are the things that we've added. This column here is a formula that we've put in, and this is what I'm going to show you next. But what we want to do, because this column with the vendor name, it will display this for any of the balance sheet accounts lines on that transaction. Right now, it doesn't show it on the income statement side, but what I'm doing is I'm basically bridging that gap. I don't know why I haven't thought about asking Lightspeed to do that for me in the past, maybe because I'm just used to running custom reports, but these lines populate this if it's on the balance sheet. And so what we do, you can hold control on your keyboard and you can click and drag the sheet to another sheet, and it's going to duplicate that page for us and just have all the same data. We'll see how, here we go. And what I do is I delete all of the columns, and you do that by selecting, and then you can either right click to delete, or there's some keyboard shortcuts there. But I remove everything except for the transaction number and the AP vendor. I add a filter to come in here and find all of my blanks. And I delete all of those lines out. And then that gives us this full list here. One other thing that you can do, you don't have to do this step, but if you didn't know you can do this in Excel, this can be very useful when you're building and working through multiple reports. On your data tab, there's this button to remove duplicates. So you go data, remove duplicates, and it's automatically going to find them and get rid of all those duplicate data sets for you. And the reason why I do transaction number, so you're probably very used to using the document number in Lightspeed, which is good and that is specific, but there can be multiple entries that have that number in it. The transaction number is a little bit more unique or specific. And so we keep that one, and then we have the vendor name here. And then what I do at the end of this report is I do a VLOOKUP formula. And in that formula for a VLOOKUP, that basically allows you to pull information from one page and bring it over to the next. So I'm looking at this transaction number, and I hit comma to start my next section, and I go to the sheet I want to be on, and I say, I want you to look in here and over to here, and then you do another comma to say, now what I want to do next, I want to bring back column 2. So I know this is super fast, and I'm going in Excel, which a lot of people may love, a lot of people may hate. This is recorded again, so remember, you can kind of go back and see this, or if you want some help with this, I'd love to help you with that. Once you do that, you hit enter, and that will look in it and find it and pull the name over. And so I've already done that and ran that through the rest of the system here. And the next step is building a pivot table. And that's super simple. And a pivot table, just so you know what that is in Excel, it is a report building tool, and it's very simple to use. So the way that you do it is you just click anywhere in your data, you go to insert, and I want a pivot table. And it's going to select everything that it can find in your range, and it's going to ask you, do you want to build a new sheet, or do you want to work off of an existing sheet? You don't have to worry about that. You just hit enter. So again, just click anywhere, go to insert, pivot table, enter, and it's going to bring you to this report builder. And so this is where the pivot table will display. Over on this side is where you get to build your reports. And so again, I've built one here where I've added the profit balance as a filter because I only care about looking at my income statement accounts. When you add date over into your columns, Excel does some extra things for you and adds the months or days in. I've added the balance in my values. And then here I have vendor name and description. So I know I didn't explain kind of why I come into this or why I ran all these at the beginning, but this is where you can start to analyze your data, and everything that you're seeing, this is a demo environment and demo data, so none of the numbers are going to make a whole lot of sense. But with the pivot table, I can easily just move these around and the reports change. So again, it's something that's very easy to manipulate, and you can kind of walk through a lot of data at once. And if you see something funny, like we've got Ashley Olson with some weird numbers coming in here, I can double click on this line or any of these numbers in here, or this negative 33,000. When I double click on it, it automatically creates a sheet and gives me everything that makes up that line. And so it's helpful walking through the information. And while we're looking at this report and we're doing it to kind of analyze the vendors, you could really use this for analyzing pretty much anything, and maybe taking this to one of your 20 group meetings or peer review group meetings, or with your tax accountant or other consultant. In order to get down into the nitty gritty of the business, this allows you to see the individual entries versus just seeing, if you're running an income statement or the balance sheet, you're just going to see the balances. But if you want to see the detail underneath for what made up the changes, this report, that 101 GL history, will do that for you. The second report that we built is called the 204 AP vendor details. And this is helpful for a couple of different reasons, but it'll pull the active vendors in your system, and it will give us the information here for that is crucial for 1099, so address and their EIN number. If we don't have that, it's something that we have to get in order file our 1099s. And if you haven't done that yet, here's a good reminder that needs to happen before the end of the month. In Lightspeed, there's a checkbox that you can check, and I'll pull that up in just a second, where you can say this is a 1099 vendor, so that you know that you can, these are the ones we need a file for, and there's actually a report to run for that and make that process simpler. There's also something called a distribution method. So many of you may not have used this feature yet, but you can create a distribution method that essentially it stores the accounts that we should be posting our transactions to. For example, AutoZone, every time I go to AutoZone, I want that to be coded to shop supplies. Every time I go to, or if I have to pay a fee, maybe this is professional services, and this is not necessarily where they should go. Again, this is just a sample environment, but this distribution method that you set on the vendor, it makes it when you make an invoice, it just automatically pulls those accounts in for you, and you don't have to and you don't have to type those accounts every single time, and you can distribute it amongst a group of accounts. And so a lot of you might not have used a departmentalized chart of accounts yet. Again, back to that first conversation, the first thing we look at is the company making money? Next, we kind of peel open that onion and say, is each department making money? And Lightspeed is phenomenal with having they have a great default chart of accounts where they list out each department and the revenue, cost of goods sold, the expenses in each one of those. And when you build this distribution method, you're able to say, I want 30% going into one department, 20% in another, 15 in another. And then you don't have to do all that typing each invoice. It just automatically assigns it if you've assigned it a distribution. One other field that's inside of Lightspeed on your vendors is the product description. And this is something that I don't know if a lot of people use, but you can describe what are we doing with this service, or why did we buy it in the first place? Because the name of the vendor might not be super clear on what it is. The last thing I've done here, and I'm not, just for sake of time, I'm not going to go through the entire exercise of building it, but I've done a sum ifs formula that essentially pulls the data from this report for what I paid and puts it into this report. And so you could analyze this on a monthly, quarterly, annual, biannual basis and get all the data in here. But from a year-end perspective, your vendors, it's very simple, especially in a dealership environment, for people to sign up for free subscriptions that start as free trials, right? And then they turn into paid subscriptions or different things. And you have a lot of people that are potentially doing that. It is common to be paying for things that you don't even remember you're paying for. And so this helps you go through and say, why do we have them as a vendor? I've added these two columns here as part of the method. Should we change the distribution method and make it go to a different place because we want to move it? And then do we want to decide to keep or kick it, right? Get rid of this vendor because it might not be something that we're utilizing as a company. Something else that I would just mention here is looking at the relationships that you're building with your business. You might find some partners like Lightspeed, for example, or the accounting guys, or a different partner that is involved in your business, and they have some service fees and whatnot. And you might look at the amount that they're charging, but not just that. Talking with them and finding out, do you have everything that you should have? And just doing that relationship review with your vendors is very important. Lightspeed is always making improvements to their system. We're making improvements to our system, and it's something where your main relationships, you want to make sure you're in the right product, or that they might have added something new that you could save money overall, money, time, and by getting the full package. And so make sure that you're reviewing those relationships and deciding what you're going to be keeping and kicking. And part of that you might look at after maybe you've done a budget meeting or something, reviewing budgets, which we'll talk about in a minute. But this is something that can be very valuable. And so once you've done this, then you can kind of go back into Lightspeed and put in the information, and then continue running those reports. So let me just show you inside of Lightspeed here. We'll go to payables and vendor, and we'll pull up Adam's Body Shop. So in here is where you can put in their address information, their EIN number. Again, that's crucial for EIN, for 1099 reporting. And then here's where we have this product description, where you can say, what are we buying from these guys? And then down in this section is where you assign a distribution method. And here's this checkbox for 1099s. And if you've checked this box, there's a report under payables where you can run your 1099 forms, and it basically does most of the process for you. It puts everything in the boxes where they need to go, and then you can hand that over to your tax accountant to get everything filed and submitted. So make sure that you're looking at your 1099 process. As far as the distributions and setting these up, that's done under general ledger lists and distributions. Or if you're in here assigning one, you can also hit new, and then you can build a distribution from this screen, or you can even edit a distribution method from here. But we'll just go to this other distribution list. There isn't a report that I found, in Lightspeed to just pull the data for all the distribution methods in Lightspeed. But I would review these as well each year and just go through and say, advertising, these are the percentages that we have. You can hit next here at the bottom of the screen and just go through them and see if it's going to the places that you would think that they would need to. When setting up the distribution, you can choose a specific DL account, as simple like advertising like this, or you might have one like you pay us, the accounting guys, and you have a different specific distribution method for them. And so building these distributions, again, just makes it super simple. Oh, I hit a wrong button here. Let me just go make a invoice, for example, to the, I guess we knew Adam's Body Shop had something on it, but it just pulls all of those accounts in for you. So you don't have to do as much typing. Makes things a lot easier there. So, all right, let's move on to our next piece here. We'll move this out of our way. All right, so major units and parts inventory analysis. So this is something also, one of the biggest areas of your balance sheet is your inventory and flooring and or parts payables. And so this is why we like to focus here as well. But here's a couple reports that you can run it out of the system. So these ones aren't custom, but these ones you can just run their stock in the system. That will show you how old are your units and how old are your parts. A few reminders with this. Parts counts should be done before you do an obsolete process, which I'll talk into in a second. And parts counts and the obsolete process should happen after you've already cleaned up your special order list, your repair order list, and your sales deal lists in your system. If you don't do that, what happens is you spend a day or two doing your full parts count, and then you go through cleaning up your repair orders and deals and things, and they end up adjusting quantities again. And you have to go back through and adjust them again. So from a process standpoint, you want to clean up your open special orders, repair orders, and deals first, then do a parts physical count and a unit physical count, and then you can do the obsolete or unit adjustment. Part of this, just as a note, choosing new accounting methods should be rare. This means once you choose to make obsolete adjustments, you should probably continue to do so year to year to year. It's not something that you should just do if it helps you in one year versus another year. And so just keep that in mind. You shouldn't just flip-flop between methods, assuming that it's just looking to see if it made a difference. And so this last year for 24, a lot of the industry had a lower year than they've had in the past. And they might say, well, I'm not going to make an obsolete adjustment this year, but if you've been doing it, you probably need to do it again, but consult with your tax accountant on that. The method and the reason why we adjust inventory down is we're looking at lower of cost or lower of market. And in the industry, once a unit or parts get so old that they're considered obsolete, meaning they're probably not sellable and the market value is deteriorating. And so we can take an expense in the books in order to help with taxes and tax savings. But one other thing when looking at units or parts, fixed assets often hide in your inventory lists. So forklifts, you can have tools and things like that you have purchased. And in Lightspeed, the way that you did it is how you were used to doing it, right? Doing a purchase order for some tools, receiving them in, and that created the invoice for us to pay. And that's fine, but then we want to do something with that part to get that into fixed assets so we can get that depreciation and expense that in the business. And with your units, if you've bought a truck or a service van or something like that, you don't really want that housed inside of your inventory list. You want that to be in your fixed asset list. Otherwise, your tax accountant might not see that and they might not be depreciating it. This is just one more reminder on the last point here with flooring and parts reconciliations. It can cause the most significant swings in your financials. When we say that, that means it was reporting one number as far as income, and all of a sudden it's another number, and it keeps moving on us. And while today we're only looking at the inventory piece, accounts payable would be potentially an offset. If your units are wrong or your parts are wrong, you might have payables that are wrong also, so it doesn't have to hit your P&L. But if it at the same time, you might have things on your payables that are getting old and getting more outstanding, but they're not real anymore. It was a duplicate entry or something, and when those need to be cleared out as well, and there's not an offset maybe on the asset side, and so a reconciliation is more than just, for example, I've heard a lot of dealers mention, I have my floor checker come out every month, so I know my flooring is right. That is an incorrect statement as far as a reconciliation goes. So yes, they do the due diligence to make sure you have the right units on the floor and the ones that you've sold have been paid for, but they're not doing anything as far as diving into your accounting records to say, does your payables match what you show you owe me, right? That's the step for the business to take on and make sure that we're looking at that and verifying that we didn't pay them twice for a unit. That happens all the time. Or we got paid for our rebates, we got paid for our warranty claims. That's often where we have a lot of issues in our parts reconciliations. We're doing all the right processes in Lightspeed and we're submitting everything to the manufacturers, but we're not doing that last step of the controller piece of why do we have things getting old in my payables? And if it's rebates or warranty related, that's cash that we're missing, right? So make sure that you pay attention to the payables as well. On the major unit side, so we mentioned adjusting them down, and there's some different methodologies here and practices. So again, talk to a tax accountant or to us, and we can give you some clarity here. But if you've made the decision to make some adjustments, there's basically two, maybe three ways to do it. One of them is just creating another account in your GL on your balance sheet and just making an adjustment and kind of plugging that adjustment in after doing your analysis. We don't like doing that. We see that as a shortcut that more often than not it causes errors in the financials. So what we like to do is go in and adjust the individual item. And so to adjust the unit, you would create an invoice just like you would do normally when stocking it in. You're just going to do a negative number. When we do this, we suggest having a vendor called Major Unit Adjustments, so that way you can track all of them all in one place. On the unit as well, on the purchasing tab, there is a little box down in the middle called depreciation. Anything that you put in that box, that's just purely informational. It won't translate to your sales deals on the sales recap screen. It's not making any accounting entries. It's just something that you can notate, we've adjusted this unit down. You might be hearing this and saying, well, I don't want to do that because then my people are going to sell it. I'm going to sell it with a higher margin. I'm going to sell it with more commissions. The point of this is typically something that you do once a year, and it's a unit you haven't sold in over a year. And really, when you're talking to the industry leaders, you've got to be turning that inventory. You got to be moving it through. And the accountant can kind of help with reminding us, hey, these units are no longer worth this much money. That's what we paid for it. But if I were to buy the same unit today, it might be $5,000 or it might be $2,000. And so we can adjust that down. The other thing that is highlighted here is the minimum selling price. You can still set an amount so that it flags it on the sales deal. It can make that note to your salespeople. You got to try to sell this unit for a specific dollar amount. Make sure that you're still making the money you're able to make on that unit. But both of those are crucial conversations, I would say, when you're looking at doing this. A lot of dealers don't realize that your inventory Lightspeed is an accrual accounting system. It's going to be showing your inventory on your balance sheet, and even though if it's getting older, nothing is reflecting on your income statement. And if you don't do an adjustment like this, um, you might be thinking your department is being more profitable, which might might be fine. You're seeing your sales and your cost of goods and your expenses coming out, and you have your net income, but you're not taking into an account the depreciation, the cash that went out to buy all of the units you have on your floor. And so some dealers make sure that they do this, and they might even do it more often than once a year, but where they can see we didn't sell all the units we needed to. We actually, as a business, do take an expense for that. It affects our cash flow, and that can affect the profitability of the company and what's seen there. So we could definitely spend some more time. I'm going to move on from this screen just because that can be a very loaded conversation, but it's something that we should be talking about is the aged major unit inventory and what are we doing to move it, and do we want to potentially make some adjustments to as a tax strategy. Next is parts inventory adjustments. This one I'm not going to get very detailed at all because I could spend an entire 2, 3, 4 hours on this topic. Just have some questions on here. The first thing is, are you currently out of balance? You might not know this, but in Lightspeed, you have your parts module, your parts reports where you're going and you're fulfilling the counts and you have your quantities and everything there. And on the balance sheet, you have your parts accounts. And there are some adjustments that happen in the system that don't adjust both sides. As far as regular ordering, receiving, and selling, that's all fine. That's all tracked through the system. But if you go in and make a manual update to something, that's something that's getting adjusted on the part side. And it should be part of your monthly process that you're making a journal entry basically to realize those changes in the system and make sure that your parts people aren't making incorrect adjustments to their parts. And what I wanted to make sure I said with this, don't just automatically make a journal entry to your inventory valuation report. That's the report that says what your summary data is by GL account. You should be looking at your parts reports and saying, do we even believe these? And if we don't, we probably want to make, we need to do that physical inventory count. We need to go through and do a little bit of a review before we tie to that. But best practice, you should have those agree. In the event of an audit, you want to be able to provide a report that says this number is backed by this report. Another tip here, especially if you might have already done your physical inventory count, maybe you're trying to go through it again, make sure you have Lightspeed's mobile application. They've got a scanner built into it. It makes the process super simple. Brian Tierney, who jumped into welcome us to this call, this webinar today, he actually has a phenomenal webinar on utilizing the mobile app and doing parts physical inventory counts. Make sure you check that out as well. What does the industry consider as obsolete? So most dealers consider parts and accessories to be obsolete after about 12 months. Obsolete meaning it's not going to sell. And most of that is because technology changes so fast in this space, or also the client base. Our clients today want the newest thing every time, right? They don't want something that's from a model 6 years ago. They're always looking to get that new toy. And so from that perspective, you're running reports and reviewing how much of our inventory has gone past that 12-month mark and how many dollars are there. We should be turning our inventory about probably 5 times a year. And so how is it getting past that year mark? And what we typically do when we're doing an obsolete adjustment, we'll actually, once those parts have hit 24 months, because we're not going through and I guess on our side from the accounting guys, we'll do this analysis of the entire parts inventory and the aging of it. And we look at a 24-month period. And when we hit that 24 months, we take every part and accessory and clothing and apparel, everything in there, and we write it down to a penny and basically adjust it out because it's something that's too old. And when you do that, you can take an expense. Now, one thing I want to mention here is we shouldn't be banking on we get this big obsolete expense adjustment each year to help save us on taxes. That should be the first year as we're switching methods and going to stay to this method. We might have a significant adjustment, but each year that adjustment should get smaller and smaller and smaller because we're managing inventory correctly. And the question is, okay, that's what we did on the books. what do we do with the physical inventory that we still have, right? The first one that I don't know if many of you have heard this. I'd listened to Mark Sheffield. He's a phenomenal dude. He just knows so much about this specific area here. Follow him on LinkedIn for sure if you haven't already. But supplier returns, as the manufacturers require more ordering from you, ask them to take some back. Sometimes they have very good stretch goals. Maybe they're bad stretch goals, depending on how you look at it. But ask them, if they're saying, I need you to order $40,000 of parts, that's great. I can order that 40,000. But last time when you wanted me to order 40,000, I did that and I've got $15,000 of excess. Can you take $10,000 back? Right? Work in getting those supplier returns back and negotiating with the manufacturers. You don't have to just do their ordering. And just because they're going to offer a discount or give you incentives doesn't necessarily always make sense that you order as much inventory, because that incentive isn't actually offsetting your cash flow. And so make sure that you have conversations about that. The second bullet point there, find a way to have your clients pay you to take out the trash. So there's a few different things that I've heard working with dealers, and some successful ways that they've done it is they've had a $5 bin and they just put whatever parts, accessories, clothing, whatever in that $5 bin, no matter what it is. One man's trash is another man's treasure type of a thing, and you'll find people to just take that inventory and take it out. Another method that I've heard that's been very successful is you'll get different sizes of boxes, and on the box you'll write $50, $100, $200, and you'll have a shelf with all of your obsolete product on it. And you can tell your customers anything you can fit in this box is what it costs on the front of the box. And so essentially, instead of you having to pick up all that inventory and go and figure out a way to get rid of it and throw it out, you're paying your clients are paying you to take out the trash for you. And so find a way to get rid of that inventory, so that way you have the space for the inventory that is going to sell. And so keep that in mind is, what do we do with that physical inventory? Just making the adjustment to the parts themselves in the system that's good. But the better thing is actually, again, getting into that inventory management process. And so moving on here to strategies to optimize operations and financial reporting. Every department should have a checklist. Every department. So part, sales, service, rental, accounting. You might have a marina or a pro shop or something. But every department should have a checklist. There should be daily, weekly, monthly expectations. I'll show you one that we have made and provided to dealers, and this is something that will be provided to you as well for our accounting department. And so this we have some daily expectations. I'll zoom in a little bit here. Weekly, there's some certain things to do in Lightspeed. Here's some reports to run in the accounting department and say, is this right? That's the whole purpose of this whole exercise each week is this right? If it's wrong, we need to fix it. In service, parts, sales, rental. So this checklist, again, this one is designed for the accounting department for some high level things from a management perspective, what they should do. But every department should have their own checklist. And one thing that you might do as an end of year activity, you might have been posting those checklists or other things around the office, or you've been talking about it in meetings. You might do a survey, and part of your survey or review for that year might be to ask your staff, hey, here's a piece of paper. Can you write down what's expected of you daily, weekly, and monthly while I go grab something, and then come back and we can finish this review. You might also ask that question, what is the company vision and values? Something that we find that encourages a lot of conversation revolving company policy changes, or we're finding things that we need to fix operationally, is one of these next two questions. What is working in the organization or the department? And then what is not working? It's always a good thing to make sure that we're giving credit to the stories and the successes that are happening in the department, and being able to remember what we've accomplished. And that also helps us identify and look forward to we've got these issues and we can accomplish them, and we can set that goal of when to accomplish it. But just a simple survey like that, you don't have to have a 15, 20, 30, 50 question review. Just something simple if you've never done this before. What is working? What is not working? And do you know what your expectations are? Just as from an operational perspective. Let's go here to our next sheet. Departmentalizing your financial statements. We've talked about this a little bit already, right, on your balance sheet and on your income statement. I'm going to give you a super simple Excel file, so our distribution calculator. Let me pull that over here so you can see it. So this is just a very simple file where you annually, semi-annually, you put in what your revenue is. You can put in your gross profit. Square footage is a method. Payroll dollars are a method. Basically anything here is you want to do something as a start. If you've never distributed or you haven't gone through this and itemized what needs to go where. When you're working with different again, peer review or 20 group providers, they will often say, I don't want to just do it on revenue. Let's do it off of a blended distribution, whereas taking an average or a mix of revenue, square footage, payroll dollars. There might be, other methods than what are displayed here, but this helps get the conversation going, and you can get it by typing in this information. It'll just do the math for you. And then you can have a blanket distribution. So when I say a blanket distribution, that means any new vendor, if we're not sure really if who of the departments are really utilizing all of this, that's when we use that blanket distribution method. If we have something that we know, this is something that only service uses, then when I create a distribution method in Lightspeed, I'm going to potentially only have that affect the service department. Some dealers in some different 20 groups, they're going to say, I don't want anything going to my admin department. Anything that would have gone to my admin department, I'm going to split that out and put that inside of the other departments. And there's some different theories and logic here, but you can add multiple departments. This is kind of the standard for power sports. Marine is typically, they don't split new and used. It's just units, but parts, they usually have parts and they have a separate one for pro shop. Some people don't have F&I. So again, you can kind of manipulate this and we can help you change it if you need some help in Excel, but this is the same conversation. We want to look at the company. Did the company make money or did it lose money? And then from there, did each department or revenue stream in my business make me money or lose money? Make sure that you're going into that next level, and you might need a little bit of help getting more of that data entry and things kind of sorted out in order for you to look at each department and actually believe those numbers. And so keep that in mind. Let's see here. Journal entries. In Lightspeed, journal entries are, for us, they're considered overrides. It's not something you should typically have. Revenue and cost of goods sold should primarily be entered by front-end staff, parts, sales, service, and rental. If you're doing a journal entry in there, that's where front-end reports, being those sales reports, and your financials or your back-end reports, they might not agree with each other. And that vendor analysis we did earlier, that's only showing up with those vendor names if we did it through the invoicing inside of Lightspeed. So you want to you kind of want to stay away from journal entries. They are considered overrides. Any journal entries recording, payments, for example, for credit card reconciliations or different things like that to vendors, they're not going to show up in your 1099 reports or vendor analysis. You need to do those through vendor invoices if you'd like that to display. All right, so looking into 2025, kind of getting to the end of what we have prepared here. There's a few bullet points I wanted to talk about. Number one is tax strategy. You should be having meetings during the year for the year you're in as well. Oftentimes you'll have meetings, in March for the prior year or June for the prior, depending on where you're at and where your financials have been. And the focus is on the past. A lot of your tax accountants would probably love to talk to you more about the future, but we don't have data we can trust yet. And so it's hard to do those meetings. Just from a industry perspective, it's getting harder and harder to find a tax accountant. They are leaving the industry. They don't want to work 80-hour weeks anymore. There's business consulting and other gigs going on where there's a little bit of a shift there. And so it is harder and harder to find a tax accountant. I would just ask that question. Are you happy with your tax accountant? Are you doing planning meetings? If you're not, we would love to talk to you. But you should be planning for the year that's coming and knowing what you're going to be paying in taxes versus it being a surprise at year end. And if you are seeing that your taxable income is high and we want to strategize to to make it be so that we don't pay as much in taxes as we need to, or what's there. Not of avoiding taxes, but right, but strategizing maybe deferral. Make sure that you're doing that conversation throughout the year. Otherwise, it might be too late if it's been after that. Another tool is, in our opinion, you have to have a DMS system. Any of you that have listened to any of this webinar and you're just in QuickBooks, it's not good enough. QuickBooks is not designed for dealerships. You need a DMS system, and Lightspeed is phenomenal. There's so many things inside of this software and so many tools that are available that allow you to then streamline your operations and your business, that take the jump, make the leap, do something to get into the DMS. A couple things I want to show you here that people may not have used inside of Lightspeed as far as looking forward. The first one is budgets. So in Lightspeed, if you go to General Ledger and Chart of Accounts, you can open up any detail account. So headers, totals, and consolidated accounts, you don't have to do anything with budgets, but any detail account, you can go to this monthly tab and put in a budget. And you can only do that for the current year that you are in the system. If you're looking at this screen and this still says 2024 or previous year, you haven't rolled your year over yet, and that's done under General Ledger and year-end processing. When you hit this button, what that does is it puts you into the current year, but it also makes it so you can't finalize sales deals or cashier repair orders more than two years in the past, and you can't make journal entries more than 5 years. So hopefully you're not that far behind. If you are, definitely give us a call. We'd love to help you catch up. But you should, other than that, you should be able to hit that button, and then that'll also prevent that alert window popping up saying you're posting transactions in the wrong fiscal period. But it will switch this, so this will be in 2025, and you can put a budget for each month on that specific account. So a budget more on I would say on the income statement, and then you can run a profit and loss statement in the system here, where you can see how do we do versus my budget, and see where that aligned. You might say, well, why would I put a budget on a balance sheet account? I see it more like a threshold. So you might have specific accounts where you say, I don't want this balance going above so many dollars, right? That could be your parts inventory. It could be your flooring. It could be contracts in transit. It could be, different accounts where this is what the expected balance should be, or the threshold should be in this account. And then you can run some reports and build some other reports to see and track budgets and do some things outside of it. And that's what I listed here. Is I made a report to pull out the budget fields. Let me just pull that open briefly here. So when you run that report, it will list all your accounts in the budget for this year, as well as last year for what was put in, so that you could analyze it and get that information. You can build that into your financial templates for the businesses. Back here. Okay. And then the last thing that I wanted to mention was Empower Reports. So if you haven't worked with us before, I'm just going to briefly go through a couple of our slides here. But we've built reports that pull the data straight out of Lightspeed. It updates every day. You don't have to worry about any mapping. You just log in and go. It's interactive, where you can click on new or the make or models or different slicer settings, and the reports will just change for you. So here's just a couple examples of those. If you're interested, feel free to reach out to us. But basically what I'm trying to say is Lightspeed has the capability of tracking so much information, and you should be able to get that information out of it and start projecting forward. And if your data is accurate and clean and timely, you can make some really good decisions utilizing that DMS. This is a screen showing we compare all of our dealers that are in our group and how do they grade compared to the other dealers. You can get down into very detailed level for every repair order and the pricing on the repair orders, anything open or anything already cashiered, sales deals, parts, service, and accounting. We've built some cash flow statements where you can see cash flow as a trend. What we like to look at on this one is probably one of my favorites to have conversations about, but I have net income, and maybe it's showing as an income, but I went down to my cash balances. How is it possible for me to show income, but I'm losing cash. That's what this cash flow statement is supposed to help express, assuming the information is correct. And that's usually the question we get from people. And they might be the other way where I've got so much cash, but it's not showing that I'm ever generating a profit. And the cash flow statement basically shows you where your dollars are being spent or where it's hiding, depending on what situation you're looking at. But cash flow statements are very useful as well. This is one other report that we mentioned on your balance sheet. The older something gets, the more likely that there's a problem and there's an issue. And so this is where we've pulled all the schedules together on one sheet, and you just have an aging up here, and you can click anywhere, and down below it'll show you the detail. But if it's getting old, it's probably wrong. Contracts in transit, we don't expect anything in there after 15 days. And each one of these should have a policy, I would say, in the business of what is our life cycle. So 15 days contracts in transit, regular receivables, probably 60 days, warranty receivables, 30 days, service contracts receivables, probably 60 days, inventory a year. And each of those will have a specific time frame. And you should have that policy in your business so that okay, we've got to have it fixed or finalized before this date to make sure that we have an efficient business. And so I wanted to just kind of talk about that, utilizing that page there. Last thing before we move into the Q&A, any of you who haven't heard already, we do have a conference happening the end of February, so the 24th through the 26th. You can use this coupon code to get a little bit of a discount there to come to the conference. I'll just show you, if you go to theaccountingguys.com, there's a link here for our TAG conference. This will explain the topics that will be discussed. It's kind of a choose your own adventure. So all these topics will be repeated 2 or 3 times, where you're able to, if you want to see it twice, you can, or if there was something else going on that you had a lot of interest in, you can see that and then see one later. But it's 3 days of workshops, and we're doing a couple of networking activities as well with the dealers coming in. Make sure if you do come to bring a laptop, and you also would get free access to our Empower reports while at the conference. On here, we have also listed some of the speakers, and we have some guest speakers from other groups coming in to meet with us as well. Talks about what the pricing is for the tickets. Travel wise, we are in Provo, Utah, so that's where the event will happen. If you can get into the Provo airport, that's the closest. Salt Lake is probably one where you'll find most flights going to. And we're inside of the Provo Marriott Conference Center. And so very good space. We had a lot of fun at our last one in October. If you can come to it, definitely. I would say the audience is meant for owners, GMs, office managers, controllers, bookkeepers. We did have some parts managers and F&I managers come to the last one, and they had a really good time and learned a lot as well. But we're looking at business management in general, and getting more efficient in the business. So if you can come to that, that'd be phenomenal. Let's go to our next slide. Maybe here. Already mentioned this about our website, but why would you want help from us? We care about dealers. We're a regular accounting firm. Half of our firm focuses solely on dealership accounting. We work with about 300 dealerships across the country on a monthly basis. Feel free to schedule a call with us, talk to us, ask us some questions. And if you need a new tax account, we'd love to file your taxes as well. But we understand not just the accounting side of it. We understand what parts, sales, service, rental, what you care about on the front end. And that's what we enjoy, is helping the dealers getting the data they need in all aspects of the business to become more efficient. All right, so before we go to Q&A, just wanted to mention one last time here that on Lightspeed's website, lightspeeddms.com, this webinar will show inside of the Resource Hub webinar section. It'll take about 48 hours before we get that posted in there. And some of the other documents that I talked about and those custom reports, they'll be made available to you as well. But let's go ahead and look at the Q&A here.
Perfect. Amazing information, Brian. Thank you. I've been using Lightspeed for 30 years, and I learned a bunch this morning. So thank you for your time, and thanks for the presentation. It was excellent. So I do have a couple of questions that I pulled from the audience today, and I'd like to ask you a couple of those things, Brian, and see if we can get some answers for those questions.
Sure.
One of which is, just get your thoughts on this. When issuing an AP check, what are your thoughts on making everyone a vendor versus refund by company check? in quotes.
Gotcha. So my initial thoughts on that is Lightspeed is a database. It is meant to store a lot of information. The accountant in me says make a vendor every time. Um, you don't have to. There, you do have the ability. Um, let's just go to a vendor here. You have the ability to have this say refund or miscellaneous or something, and then you can update the payee each time to then issue those checks out. We prefer not to do that. We'd rather just have um, set them up as a vendor, make it a payable. Depending on what it is, again, they may not need to be a 1099 or anything like that. But if you're grouping your vendors together, there's less stock reports in the system that are just listed under one vendor. So you can still run reports by payee, but Lightspeed is a database. You might need to manage your active vendor list with that, but we prefer not grouping vendors. And for that same point, suppliers, a lot of times we'll have people put miscellaneous because they think they're going to use them once. What if you don't? It's meant to be a database, and it's not too hard to set up a new one.
Perfect. Great. Got another question, and I'm actually curious of your answer on this one as well. Back to parts inventory counts, and when writing down obsolescence, writing down inventory to a penny, why not set it to zero?
Yeah, it's a great question. So the reason why we set it to a penny is because you still need to do something with that inventory. You could put it to zero, but it's more of a reminder for the parts managers to easily identify those parts and do something with them. And so you definitely could do either or. We just like to put it to a penny because materially, even if you've got 3,000 parts, it's very small.
Perfect. And then maybe the last question I'll offer, and this came up a whole bunch of times, and you've already kind of spoken about this, Brian. Will some of the custom reports and some of the details that you shared today be available to access following the presentation? And I think we've already said yes, but I'll maybe just reiterate that with our group today.
Absolutely. Yep. So the custom reports are available, and that distribution calculator in Excel is available, and the accounting department checklist will also make sure that that's available. If you'd like us to assist you with with an accounts payable vendor analysis, we'd love to just do that with your data instead of with our data. It makes a lot more sense there. But yes, the webinar is available as well as the custom reports mentioned and some of those other supporting documents.
Excellent. Well, I think that concludes today's webinar. Thank you so much, Brian Lucas, and for the folks from the accounting guys. We certainly appreciate your time. Excellent webinar. We appreciate everybody for attending. Again, we'll share that content to the website following the meeting. Thank you so much, and we look forward to seeing you in the future webinars this year in 2025.
All right. Thanks, everybody. Good to talk to you.